presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good afternoon, folks. This is Steve Rhodes filling in for Tommy O'Brien, doing the Tom O'Brien Show. Welcome. Happy February the 2nd out there. We begin our day here with a rally in the equities. You got all the U.S. indices are trading to the upside. You got the Dow up 576, S&P up 46 points, 221 for the NASDAQ 100. The Russell up 35. Trend is up 523. Semis up 150. NASDAQ Composites up 160. New York Stock Exchange 170. Gold's off $52 with silver being up $1.70. Light sweet crude is off $3. That's nearly a 5% move. $1, about a 25% move in the case of natural gas. 30-year Treasury down 14 ticks, print out 114.22. Our leaders in the clubhouse this afternoon to the upside. Booking Holdings $115, 2.5%. SanDisk $80, 14%. Monolithic Power Systems $42, nearly 4%. Lumenthum up $36, 9%. Saia, the freight company, $33. That's a 10% move. To the downside, it's Phoenix Asia Holdings off $113, 85% move. Yikes. IDEX Laboratories down 6% or $38. Cavco Industries $31, 6%. VSE $23, 10% out there. So plenty to look at. Of course, I want to look at what you want to look at. And you can always send me an email. Send that off to steve@tfnn.com. In that subject heading, please put radio show question. That'll make it much easier for me to identify your email from someone else's. But in the meantime, let's go ahead and get to these markets and see what, in fact, they are doing. And so let's begin by taking a look at the daily equity future. Well, let's do this here. Let's take a look at the position of the spot VIX in the New York Stock Exchange, the advanced decline oscillator. So the advanced decline oscillator is the difference between the 19 and the 39 period exponential moving average of the advanced decline line. On my screen here that you're looking at, the advanced decline line is panel number 2 from the top. You can see a green arrow. That green arrow has a advanced decline line number of 608,289. We're at 608,083. Now, that was made when back on January the 22nd, so 2 weeks ago. So very strong market breadth. If we close at a new all-time high and you are in the camp thinking that there's somehow going to be a significant move to the downside for the S&P 500, you're nuts. It doesn't happen. It doesn't work like that. It's really important, we don't spend a ton of time taking a look at the advanced decline line and what the meaning is when it's at an all-time high. And that's really something that you should understand out there. The advanced decline line, if we take a look at the difference between this 39 and 19 period exponential moving average, that creates an oscillator. That's what is below it. That is panel number 3 to the downside, panel number 2 to the upside. When that indicator is above the zero threshold level, right now it's at 3.5, 3.49 or so, then buyers are the ones that are presumed to have an edge. We closed above it on Thursday. We closed below it on Friday. We're just oscillating back and forth on the oscillator and change line. Nonetheless, we closed back above 359. It tells us that buyers were the ones that always had control. The spot VIX index is another tool that we use, and there we take a look at how the spot VIX index is trading in relationship to its 50-day exponential moving average. That is the bottom left-hand panel. What you can see here is the 50-day exponential moving average is printing at 1650. The spot VIX, on the other hand, printing at 1628. So close below 1650 on the spot VIX, an advanced decline oscillator that closes above zero. Those are both bullish conditions and provide buyers with an edge. But just because they have an edge, does it mean that markets are going to rally? No, it doesn't. And that means that we've got to take a look and see what else is going on. So here we switch over to the daily equity future contracts. You'll see A to B equals CD patterns on all 4 of these instruments, the ES, the NQ, the Dow, the YM, and the Russell 2000, the RTY. You'll also see that early this morning, about 1, 2 o'clock, we had the ES Mini pull back and test a trend line. That's that black diagonal line. The NQ did the same thing. It found support. So if I were you, I would put that trend line on my system because their price closes below that. That's telling us something else. Now, that something else might be some other profile that price would get down to. And speaking of profiles, we have the NQ form a new daily profile. It is a bullish structured profile. And here, price is trading above its oscillator and change line. The oscillator and change line is printing out at 25,858-ish. That number will move up and down as price moves up and down. But here's the deal. If we close above that green oscillator and change line, it increases the odds substantially that price will make a run for the 26,084 level. That happens to be the top of its profile. This profile formed above the prior profile. That is a bullish signal out there. In fact, the last profile formed above the prior profile. The markets lose the thought process that we're going to see some substantial move to the downside. If we take a look at the Dow equity future contract, you can see it's got a wave number 7. That's a letter G top out there. Right now, price is trading. So what the Dow equity future contract has done is it pulled back to the levels where a counter trend move to the downside would find support. And that happens to be at the 48,702 level. What did we do last night? What did we do on Friday? We tested those areas. But what we're doing right now, and it doesn't matter at 3:12, it matters at 5 p.m., when everything is settled, where does price close? If the YM is trading above or closes above 49,524, it's telling you it's ready to go take out that wave number 7 top and make its way up to that A to B equals CD pattern to the upside. The Russell 2000 does not have any kind of a topping pattern. It's got an A to B equals C to the upside. Price just consolidating with inside its profile, 2613 to 2692. If we go take a look at get the other charts, black background screen up on our screen right now. Come on. What's the deal? Okay. So one thing I pointed this out this morning, it's really important to understand, especially this time of year, where we're trading in relationship to the 2025 high. Well, in the case of the Dow, we are trading above it. When you trade above the high of any instrument from the prior year, you are in a bullish mode. You are in a bullish breakout mode. So what you want to watch here inside the Dow cash index is the 48,886 level. But because we're trading above it, what we just looked at on the Dow equity future contract, if you get those closes above the green oscillator and change line out there, that also increased the odds that we're going to go ahead and see that rally to higher price. The S&P 500 is at 69.82. It's 40 points above the 2025 high. So it too is ready to rally. The NQ needs a close above 26,182.10 to join them. The DAX, if we go take a look at what's going on internationally, it's 2025 high was 24,771. We closed at 24,797. That is in a bullish breakout mode. And take a look at the FTSE out there. The FTSE actually closing at a new all-time high, closing at its highs, closing above the 2025 highs out there. What, you think we're going to have some kind of major bearish market in the U.S. and that the international markets are not going to participate and be in that? Yeah, I don't think so. Take a look at the semiconductor index. We are trading well above its 2025 high out there. Not so much for the Shanghai just yet, not for the Hang Seng. And the Nikkei closed at 52,636. We closed last night at 52,655. It too is poised to rally. See Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks, to the Tom O'Brien Show. This is Steve Rhodes filling in for Tommy. And right now we're taking a look at the charts here for gold. So I had a question come in late this morning after the Trader's Edge show asking about the gold complex, the GDX. And so let's try and cover all of that here right now. Probably we'll do that again tomorrow morning because I don't know if Tony is actually listening in. But here I've got up the April gold contracts. So we take a look at the daily time frame. The daily time frame has got a wave number 7 top. That's a letter G. Small portion of the Chapman wave tools out there. So first the question is, has gold bottomed? And the answer to that question is possibly. Why would I say possibly? Well, if we take a look at the daily gold time frame chart, you'll see that this morning, early this morning, late last night, price got down to a level of 44.23. 43.87 is a TD9 count breakout level. Now, it hasn't hit that, doesn't always get down there, but that is where gold broke out from. So the markets are really about understanding support and resistance. If you can understand where support and resistance is, it helps you to understand the message of the markets. When price pulls back, it's very key to understand where different support levels are. As an example, in the case of the gold contract, it may be hard to see, but if you take a look at just the black digits on the right-hand panel of the daily time frame chart, those are showing you, at least 3 of the 4, are showing you profile levels. The top at 55.34, the center at 51.63, and the bottom at 48.85. The bottom is where the buyers are at. Well, those buyers weren't around on Friday. And this morning, or the rally that we had, poked its head all the way up to 48.85.70. So what used to be support, which never acted as support, is now turning into resistance. And so if we were to close above 48.85.70, my answer to your question, have we bottomed, would have been yes. The key number as we speak right now, going to be 2 of them. The first one's on the daily time frame, and that's at 43.87.80. But the more important number is the weekly chart. The problem with that is that this is only Monday, and we need to know where Friday's close is going to be. You can see on the weekly chart that gold formed a Rhodes momentum indicator top, a TD9 count top. And what's really key here is the oscillator and chain line. Let's just open this up. How important is the oscillator and change line to gold? I'd say muy importante, because if we get a close below that, and you have to get really 2 consecutive closes. We have not closed below the oscillator and change line since August 29th out there. We did close once below it since then on January 2nd, but we were right above it, back above it the very next day. So right now, we are testing that level, and that level is at 47.11. If we close Friday below the oscillator and change line, it's going to increase the odds that we're going to move back to another level of support. And that level of support would be 42.25, and below that 41.02, below that 40.69, below that 39.12. Those are the support areas. If you grab a copy of these charts, you will see them as well. So gold right now possibly have bottomed because the weekly time frame chart is also holding support. It's all about, will it hold support? But I don't know the answer to that until we get to Friday's close. But what we can do is we can go take a look at the intraday charts for Goldilocks. What information can we glean from them? And the information that we can glean from them is they have done everything they can to try to form a bottom. If you look at the 5-hour time frame chart, as the daily time frame is getting back to its breakout level of 43.87, the 5-hour chart forms a TD9 count bottom. And here we've got price consolidating with inside its profile. And the key level there is going to be 49.5170, the top of that profile. You'll see a TD9 count on the 4-hour time frame chart. Right now, the key level of resistance would be 48.92-ish. It's oscillator and change line. The 2-hour time frame chart, you can see a buy the D point bottom with price consolidating with inside its profile, 45.87 to 48.62. A TD9 count bottom of the 60-minute time frame. You kind of get the picture here. TD9 count on the 30-minute time frame chart. Gold is absolutely attempting to form a bottom. How will we know? I would say that the first signal would be that price would close above what? I would have to say price would close above the 5-hour oscillator and change line. And the top of that profile, and the center of that profile is at 49.52. If we can close above that area, we ought to see a move to the 52.68 level out there. What else can we take a look at when it comes to Goldilocks? Let's open up the black background screens out here. Let's take a look at the horizontal trading ranges. Here I've got both horizontal and diagonal price channels. The horizontal trading ranges, those were established way back here at the price point of 274.50 because there were 79 opens or closes at that area. The next largest area or congested area was at 1295.90. That set up on a monthly basis the horizontal trading ranges. Those dashed lines, those are the midpoint levels out there, and sometimes they can act as support or resistance. Now we take a look at the gold chart out here. If we start back at the 1999 low out here, what we'll see is we have a 1 to 2.618 A to B equals CD pattern to the upside. Remember, when we were looking at the weekly and the monthly time frame charts, they both had bearish reversal candles. So what we have inside the monthly time frame is a sell the B point top. Price immediately took itself back and is trading below the center of a horizontal trading range at 48.70. And as long as price remains below that, it will try to reach 43.60 again. It already did that earlier this morning. That is the next key level of support when we take a look at horizontal trading ranges for Goldilocks. What else can we take a look at? This is the caution sign out here. Oops, that's not it. This is the caution sign. And that caution sign is Goldilocks made all-time highs in every major currency on the exact same day. Now you can see I've got trend lines in here, and I don't have them on the daily time frame. Let me see if I can turn those on. Give me a moment, because price here also came back to its trend line. Give me a moment. We should be able to. I think I've got that in here. There we go. So we'll get that trend line on. Let me try the euro. Let me just turn these on if they are not. The euro is on. So there we go. No. So the euro pulling back. No, the euro has further to go to get down to its trend line. But you can see there's a cluster of support in these trend lines. We start breaking through those, then the answer is no. We have definitely not formed a bottom. But this is a danger. It can be a dangerous thing. This is how highs are actually made, and that is that we top at the same time in all of the major currencies. All right, so let's move on to the GDX, because that was also a question, not just with regard to the gold complex, but what's going on with regard to the GDX. So let's get back to this triple set of charts here, GDX. We'll have the daily, the weekly, and the monthly to explore and see what kind of message they are providing to us. I can already tell you that the monthly message is telling us that the move in metals is not over. The move in the GDX is not over. How the heck can you say that, Steve-O? Well, here's how I say that. In the month of December, we had a TD9 count completion on the GDX for its monthly time frame. And last month in January, we closed above that high. We closed above that high immediately. That tells you about a strong upward momentum move. That is what's going on. And therefore, it's very likely that we have not made that all-time high. I know that goes against the grain a little bit in what I showed you on the black background chart, but taking out a TD9 count on a monthly basis, what that tells us is that we will get to higher prices. It doesn't mean immediately. If you, again, on the daily time frame, we take a look at the GDX now, you can see it had a daily TD9 count top. You can see that a weekly Rhodes momentum indicator top. So those are right now what are controlling what's going on the monthly basis. And if the GDX remains below 94.44, the daily TD9 count breakout level, price should move back to 89.75. 89.75 is the dang it, where did I put that? 89.75 is the top of the weekly profile. Oh, here it is. It's the top of the weekly profile. So 89.75 is the next level of support to the downside. I just wanted to see if there was another TD9 count breakout level out here on the daily time frame. So let's see if we've got one. 87.28. So you got 87.28 and 89.75 are downside targets in the GDX. We close below that. I've got some other areas, but right now let's deal with one thing at a time. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back to the Tom O'Brien Show. I'm Steve Rhodes, filling in for Tom. Great to be with you at 3:30 on February the 2nd. We're taking a look at the charts here for Wave Life Sciences. Ticker symbol there is WVE. Now, when we take a look at the weekly time frame, I'm going to start with what this did up at the top. So the only topping pattern that we have for Wave Life Sciences comes from the weekly time frame chart, and it was a sell the D point top, and that was confirmed with this bear sash candle back the week of December the 26th out there. Now, what price has done? Let's open this chart up. What price has done, what it's supposed to do, as we've been discussing, as we always discuss, it pulled back to, when you form a top, all that it gives you the right to do is to get back and test support. Now, it may give you the right to just simply blow on through that top out there, and that's what we took a look at with regard to the TD9 counts and why silver, is telling, or the GDX on that monthly time frame is saying the move is not over because it negated a TD9 count top. But now we're talking about WVE, and price pulled right back to the first. Well, it pulled back to this green oscillator and change line, which it does when you get tops or bottoms. That really becomes a really great target line. Now, what price needs to do is hold that oscillator and change line if WVE has formed a bottom. Yeah, this huge breakout here. We're looking at the weekly time frame. This thing gapped up with 226 million shares. Give you an example. Last week pulls back with 24 million shares, 10% of the volume. But the question is always, is it going to come back down here and fill this gap? And I don't know the answer to that. If it were to close below, what good are you, Stevie? Yeah, at least I'm honest with you. If the price were to close below 13.25, that would increase the answer to yes, we should see lower price. And that lower price would take us back to the bottom of its profile. That's at 11.14. If price does rally from here, the next level of resistance at 15.68, the center of its profile, the top being 21.73 out there. That's the weekly time frame. We started on the weekly because it's the only one with a top, and it's one that we should really monitor. Now, when we take a look at the weekly chart, getting back to that breakout level, that gap to the upside, we can see on the daily time frame there was a completed TD9 count bottom pattern on Friday. Now, what price is doing, it's trading with inside its daily profile, and that's between the range of 12.75 at support and 13.73 as resistance. There's additional resistance on a rally for WVE. That next level would be the oscillator and change line, approximately 14.04, and above that, the TD9 count breakdown level, 14.51. That is the number, 14.51, that you really want to see a close above on a daily time frame to tell you that you are likely out of the woods and that you're likely to head higher out there. Now, in the case of the weekly time frame, price simply needs a close above the high from December 26, 1850 to negate its sell pattern out there. And that's what's needed to give you the all clear that we're headed higher, Dan. So I hope that helped you out with regard to WVE. McGuppy wants to take a look at Berkshire Hathaway. So let's take a look at the B shares, BRK. I think for me it's underscore B. Yeah, it is. Good. So let's see what Berkshire Hathaway is doing here. Trading out, having a nice day. Yeah, 487.39 is where it's printing right now. What you'd like to see here, McGuppy, is you'd really like to see price close above the top of that daily profile. And you're sitting at it right now, 487.35. You're at 487.32. See, what I don't have here is a bottom pattern. I have a negated bottom pattern. That's right. This forms a TD9 count bottom on January 26th. The very next day, it negates that signal. Tells us it wants lower price. Now, the weekly time frame, as you can see, last week formed bar number 8 of a TD9 count. If price closes on Friday below, and it's a likely outcome, 504.08, Berkshire Hathaway on a weekly time frame will have a confirmed TD9 count bottom pattern. So that's one of the things that I would be looking for. You don't want that. I know that you're having a good day and you want to see this rally, and I'd like to see this rally further with you as well. I'd like to see this at least close above and stay above the top of that daily profile. If it doesn't, We got to watch and see how this thing trades tomorrow because, again, no bottom pattern on the daily time frame. But we do have a potential of a bottom on the weekly. The monthly time frame shows a cluster of sideways movement. And the sideways movement is finding support at the upper end of its buy zone. In other words, the buy zone is between 448.32 and 469.15. Resistance is 542.07, the top of that profile. So that has held that buy zone, the top of the buy zone, at 469. Just a sideways-ish consolidation, probably getting you a bit frustrated there, McGuppy. Nothing we can do about that. But what you want to certainly watch is the development of that weekly chart, see if it forms that TD9 count bottom, because I don't have one on the daily, and I don't have one on the monthly. So I hope that helps you out with regard to Berkshire Hathaway. I'm going to check the phone, see if anyone has listening and sent in a request. I think the answer to that question is probably not, because I don't normally do this show at this time. But if you did have a question you are listening, Steve at TFNN.com. So we're going to check real quickly here. I do not believe that I have any other requests out there. I don't think I have missed anything. So let's do this. Let's go over to the black background charts, pull those up. See if we can figure out what we ought to take a look at. Let's start with our main screen out here and take a look at some instruments that are moving higher and moving lower. So I'm just going to click on them, SanDisk, and I'd look up at the upper right-hand side, see what that is doing. Let's take a look at the SanDisk charts, SNDK. So give me a moment. We'll get back here. SNDK. See what these charts are doing. Weekly 3-line channel. That went away. Sorry there, Mr. Bill. TGB. Danny will do that. And we can do IBB. Yeah, we'll do those up for you. They're free. So let's first get this one out of the way. If we take a look at SanDisk out here, we've got no daily topping pattern. No reason for this to not continue to rally. That's the same message from the weekly time frame chart. And that is the same message from the monthly chart. So SanDisk, SNDK, ought to continue to rally. A bearish reversal candle would confirm a daily Rhodes momentum indicator top. Let's go see what's going on with the IBB. Boy, I haven't pulled that open for ages, it seems like. So let's go see what this is doing with inside the healthcare sector. The IBB has a daily Rhodes momentum indicator top that's led to a sideways move with price finding support at the bottom of its profile, 168.72. Resistance is going to be that Rhodes momentum indicator top, and that was the candle high from the trading day of January 7th. And that level, 179.64. The weekly chart does not have a topping pattern. Oh, I do not take that back. There's no topping pattern on the weekly time frame chart. Just price trading with inside its profile, 161.71, all the way up to the range of 174.40. Those are your profile levels for the weekly chart. The monthly chart. The monthly chart has a Rhodes momentum indicator top. It needs a monthly close above 177.37. If we get that, it's going to be off to the races to the upside for the IBB. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back to the Tom O'Brien Show. Steve Rhodes filling in. Nice to be in the chair here. We're taking a look at ticker symbol TGB. That's Taseko Mines, primarily a copper mining company out here. We take a look at the daily and the weekly chart. We have clear topping patterns. The daily time frame was a sell the D point top. That formed with this gap to the downside on Friday. Prices traded with inside his profile, 859 as resistance, 716 as support. Just because it's got that top, does this mean to sell? Well, I would say, first, it depends upon what your original objective was. On a daily time frame, you would not have any kind of sell signal until you got two closes below 716, the bottom of its profile. If we look at the weekly time frame has a wave number 7 top. Now, granted, if we get to a higher high, that wave 7 top is going to extend itself. But right now, I'm assuming that we won't. And what price should end up doing here for Taseko Mines is pulling back to 675. So we've got one call for 675, another for 716. The monthly time frame chart says that it's just short-term or intermediate-term corrective. It is not long-term corrective. Why? Because last month, TGB negated its monthly TD9 count top. And there's no reason for this to not continue to move higher out there. Well, the reasons would be the daily and the weekly. So we have a good picture, a good view of TGB by taking a look at the monthly, which says we want higher price. It's not controlling, though, what's going on right now. That's really coming from the daily time frame. And on the daily time frame, that says we're going to watch 716 like a hawk. That's the bottom of its profile. And as well, I'd suppose we'd watch 859, the top of its profile also. So that's what's going on. Dan from New York City on TGB. Hope that gave the information that you were looking for. Fletch has interest in taking a look at the charts for UPS. So let's get that up on our screen. They must be rallying. I believe the transports were up pretty big today. Transports, UPS, oh yeah, they are trading above the top of their daily profile. And that's at the price point of 109.67. But the number that's most important for UPS today, Fletch, is going to be the high from January 22nd, 110.04, and we're at 110.52. If we close above 110.04, we negate the daily Rhodes momentum indicator top. We likely end the day above the top of its profile and its green oscillator and change line. You know what that says? We're off to the races. Where would those races take us to? Excellent question. In the case of the weekly time frame chart, once price is able to close above the top of its, or at least trade above the top of its profile, 110.89. So hint, hint, 110.89 is the next resistance point. That comes from the weekly time frame. If we can move above that, we continue to move higher. Move higher to where? Excellent question. What I can share with you on a monthly basis, as long as price remains above the top of its profile, and that's at I take that back. The center of its bullish structured profile is at 109.80 or 110.50. If price can stay above that, we rally all the way up towards 136.99. So how would we call this? Everything looks pretty good. Looks like we get a negated daily Rhodes momentum indicator top. If we don't, be careful. But even if we get that, there's a possibility between right now as we're speaking and 2 weeks from now that we get a weekly TD9 count top. If it was going to be right now, we'd see the daily start failing. We're not seeing the daily failing. We're seeing the daily that may take out a topping pattern and suggest that we continue to move higher. So those are the things, those are the areas that I'd be paying attention to, Fletch, when it comes to UPS. I hope that gave the information that you were looking for. Just checking. Nope. Okay, I don't see any other questions. Again, just checking on email. Here we go. Ron. Hey, Ron, thanks for writing in. Can we take a look at Tesla? Absolutely. Let's go take a look at Tesla, TSLA. See where this is trading. It made its way all the way back to its all-time highs. But where is it trading as we speak right now? Tesla printed out at 423.36. The all-time high at 498.83, so it's off that by a few bucks. If we take a look at the daily time frame chart, the daily time frame chart for Tesla has a negated TD9 count bottom pattern and is suggesting that we get back to its breakout level, and that's at the 401.09. Ron, that's what the daily time frame chart is communicating to you, and I want to get rid of this A to B equals CD pattern that we've drawn in, or that line. So the daily time frame is suggesting to you and I 401.09 is its price target. The weekly time frame chart has a Rhodes momentum indicator top. Price is below the center of its profile, but it's really inside a buy zone. And that buy zone is anywhere between 394.39 and 429.20. I'm going to go with 401.09 still, or basically 394.39. And we take a look at the monthly time frame chart for Tesla. We have a sell the D point top, bear shooting star that formed a couple months ago. What Tesla has not been able to do is even test the first level of support. Ron, that first level of support is about 410.83. That's the oscillator and change line. That's why I have to say about. The next level below that would be the top of its monthly profile, 384.92. So let's sum this thing up. Price on the daily time frame remains below its oscillator and change line, remains below profile. We're inside the bullish zone on the weekly time frame. The monthly's got a topping pattern. I think price wants to pull back towards the 401.09 level. So I hope that helped you out, Ron. Thanks so much for taking the time to write in. Okay, yeah, I speak to myself all the time, Jimmy. You wouldn't be surprised. Okay, so what do we want to look at next out here? Let's go see what's going on Stevie's black background charts. See what we've got happening here. We took a look at something moving to the upside, Sandus. Let's look at something moving to the down. Well, let's look at what the heck first. Now, I don't even know what's going on with this Phoenix Asia holding, so I'm not going to spend time reading that. But let's take a look at IDEX Laboratories, IDXX. So we'll take a look at those on the the white background screens out here. It looks like an A to B equals CD pattern to the downside. But let's get a bunch of additional information. ID, is it XX? I think so. We'll find out here momentarily. Yeah, IDXX. Perfect. Okay. So we'll see that there's the A to B. So this forms a daily Rhodes momentum indicator top. Folks, if what I'm sharing with you is some of the TD9s, Rhodes momentum indicator, oscillator and change line, if that sounds foreign to you, I can make it so that it is no longer foreign to you. These are easy things to grasp. I've got workshops that show you how to do that. You've got access to me to answer your questions about those patterns out there. But if you really want to understand how to read the message of the markets, really go learn those tools. I'm not saying they're all the tools to learn. I'm saying, but go learn those tools. Here's the IDXX A to B equals CD pattern on the downside. It's got an initial price projection of about 618.04. As it gets down into that area, you'd be looking for a bullish reversal candle to form a buy the D point pattern. The weekly time frame, by the way, volume today, taking out the B point, its volume is 798 versus 442, twice the volume, taking out that B point. Weekly time frame chart has the same A to B equals CD pattern. We'll wait for the daily. And by the way, with regard to support, I suppose a support level could be, because that didn't hold. Say support would have to be the high of this gap to the upside, which really started on August the 1st. 579.47 could be a level of support. All right. If IDXX is going to make its way to the downside, it has to do one thing, all right? What's that one thing? It has to close below its monthly oscillator and change line, and that is printed at 622. So you got a monthly top, TD9 count, price finding support there. If we close below that, that's when IDXX starts headed to lower price, and on a monthly time frame, that price objective would be 585.22. Steve Rhodes with TFNN. We get back from this break, we're going to go take a look at, I don't remember, I think somebody asked a question, but we'll figure it out. Steve Rhodes with TFNN. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, to the Tom O'Brien Show. I'm Steve Rhodes, filling in for Tom. If you haven't heard my show before, I do the Trader's Edge show every morning at 11 a.m. Sharp. We do an 11 a.m. update, and then 8 minutes later, we start with the show. So join us or listen to the archive. The last question that came in was from Dan inside the Tiger's Den, and his question is, what do my charts show, in essence, with regard to volatility? He uses the UVXY as a proxy, and his charts are telling him to expect or anticipate that we're going to see volatility pick up. All right. So I use when we take a look at an index, we got a 6.5-hour trading session out there. I use these time frames, 15, 30, 65, 130, 195. And the reason is because we like to have equally timed bars out there. So as I take a look at these charts, what I'm looking for is I'm looking right now for bottom signals. And the bottom signal that sticks out to me, Dan, is the 30-minute TD9 count bottom. Now, that 30-minute TD9 count bottom, this formed at 14:30, so at 2:30 this afternoon. At price right now is trading with inside its profile. Resistance on that profile is at 1650. We also have the oscillator and change line that is acting as resistance, 1651. If we're going to see an increase in volatility, you're going to see price close above that. Now, if price is able to close above that, the top of that 30-minute profile for the spot VIX index, 1616, we'll see a close above that as well as its oscillator and change line, and that would suggest that the spot VIX would head up towards 1814, its TD9 count breakdown resistance level. As I scan these other charts here, the weekly chart shows the spot VIX is still trading above its red oscillator and change line. So absolutely can rally from here. The daily time frame, the spot VIX found support at its oscillator and change line. So that is helpful out here. So do I see any signals that the spot VIX could rally? Watch the daily 50-day exponential moving average. That's not what's on my screen right now. And watch that 30-minute time frame chart. I think that'll assist you in answering that question. Folks, thanks so much for joining me here. I want you to have a marvelous Monday and a terrific Tuesday, and I look forward to seeing you again soon. Take care and be safe out there.